Can you guys hear me now? That's not cool. Can you guys hear me now? Oh God. Ah! Can you guys hear me now? Am I on loop? Is everything good? God damn it. Right. Jeez, have you just been sat there patiently waiting in silence, or what? Have you just all been sat there in silence? Oh, this is embarrassing, isn't it? This is cringe. Oh, this is cringe. Someone drop someone who's in this chat in Red Pill. Can you just let Red Pill know that I'm live? You can lip read. Right, guys, can you just tell me that there's no issues with sound and then I can crack on comfortably, right? Knowing that there's no weird stuff going on, right? If we can just get this out of the way, then we can move on. Can you all hear me now on YouTube? Okay, there's no looping, there's no weird noise. Are we good? Are we good? Oh no. Sandra Sandberg. Welcome, Sandra. Okay. Yes. Yes. I can't hear you, JD. Right. Okay. Right. Cool. Let's get into it. Okay. Welcome in if you're new. Awesome. That's good to have you on board. So we're going to break down today's price action. And so for those of you who are inside Red Pill, we have topped and ticked the entire range. It's been called to a tick, right? And we're going to break down my trades. And if you want to see my trades, you can head over to Twitter. They are on there. But we have had an absolute feast inside Red Pill today. And I'm going to break down my thesis and my trading and my reasoning for the levels which I took. Because I've seen a lot of people on Twitter who have been struggling today. You're really struggling trying to read the price. And without trying to sound combative to that, it's been really, really clear for me. Like really clear, crystal clear. And so I want to break down my thought processes and the reasons as to why I got to those levels. All right. This is just to frame reference. Like every trader has their own perfect day, their perfect style of trading, right? And I get it. But this sort of stuff is like me. It's me all over. I don't mind this sort of price action. I don't like trending days. You might find that you're a better trader as a trend trader. I'm not a trend trader, right? So everyone's got to find their own hole in terms of where they sit as a trader. But for me, this for me is, I like this sort of stuff. All right, I like this sort of stuff. So for me, this is like perfect trading territory, right? It was awesome. And I'm going to break down. We're going to start in the Asian session, and we're going to go all the way through to where we are right now. Okay, and we're going to go through the entire session as to where I got my levels from, and essentially how I've taken over 30 or just over 30 handles today, right? And we're going to go into it. So, firstly, we're going to look at this Asian session here, right? And then we've got the London session right here. So my first trade was a top tick of this range here. It wasn't quite a top tick, but it was on this level, right? I let price run a little bit higher. And what I want to teach you guys is something key to your understanding in understanding Judas swings and how to trade a Judas swing, okay? And how to trade a Judas swing. And what we've got here is the range in Asia, and we're looking at the range, the high and the low of the Asian session. And then we're looking for a purge if we are bearish of the sell side of the Asian session range. Okay, and this red line indicates the kill zone for the Asian session. Now, you've got to have in the back of your mind why you are bearish. And I'm not going to go into absolutely every reason why I'm bearish, because I've explained this to death over the last few days. But what I'm looking for is higher time frame PDRAs that price could run into to reject off of, right? So, can somebody please tell me why I was looking at this level here for price to reject on the higher time frame? What are these two green candles here? What is that? There's such a crazy lad on YouTube. It's unbelievable. No, I just like how quick it is in Discord. You know, it's like immediate. I'm a patient guy and I'm disciplined on patience, but this definitely tests your patience. So I've literally got to wait for you guys to catch up to where I am at. You know what? I think the delay is so long. It's just going to be paying for us to keep doing this. So what I'm going to do is I'm just going to keep talking, and then if you've got any questions, guys, just drop them in the chat and I'll pick them up. I think that's probably the best way to do this, because it looks like I'm about a minute and a half ahead of you. Right? So if you have any questions, drop them in the chat, ask me any questions, and I'll pick them up, and then you'll get them in some like weird Inception type way, right? But this is an order block, right? So if you've answered this in the past and we're now in the present, then you know this is YouTube for you, and this is why I don't particularly like YouTube to teach, but it is what it is. This is an order block, and so if we know our PD array matrix, then if price is going to go above an order block, it's going to go into a rejection block and then into an old high. Well, we don't have a clear rejection block, and I don't see this high being taken, right? Because this is the Tuesday the 4th high, and for me, that is only going to break on data. So for me, I'm already framing a context in the London session that price is going to reach a certain level before rejecting, okay? And this order block on the PD matrix on a higher time frame is where I'm looking for the Judas swing to reach up into, okay? So we have the Asian session range, right? We have the purge of the sell side, and this is fundamental to the London session Judas swing, right? That is not the Judas swing. This is the purge. That's accumulation. This is the purge. This is the Judas swing, right? That is the Judas swing. And the Judas swing is into that order block on the higher time frame. So the hourly order block, all right? This is where we look to frame our short. Okay, that's where we go short. And so I took my short, okay, with the stop, very, very tight stop. I'd usually do 3 stops as my standard stop. Running it down to what? I wish I like interactive teaching, but YouTube doesn't allow for interactive teaching. If you prefer interactive teaching, drop into Red Pill. All right, but here we have a breaker block, right? Right. Okay, we have a breaker block. Oh, I've just seen my thing freeze. That's lovely enough. Okay, this is a breaker block. So when price is up here and it's fulfilled its objective of running into that order block on the hourly, right? What is it reaching for? It's reaching for the nearest breaker, right? And this is your breaker block. Okay, so this is the trade I took in the London session. But this is your Judas swing out of the Asian session consolidation after you get a purge in the London session low. Okay. Now this is PhD level ICT. Okay. This is no if, buts or maybe, no BS. This is how I've managed to take my trades today. And you can take this forward into your own trading, okay? This is completely applicable to how you can trade. You know, so you don't need to be reliant on someone going, you know, get in here, get in out, get in here, get out here, right? You can start to do this on your own right. And so you get in here at the higher time frame PDRA. In this instance, it's the order block, right? Price moves down into the breaker block. That is your trade, okay? That is your trade. Now, what was formed? In fact, I'll just stop here for a second. Does everybody understand that? Can everyone just put into the lobby that they understand that? Into the chat, do they understand that? I love how we're basically just doing red pill on YouTube. Everyone's red pill, which is cool. I like that. That's cool. So that frames the reason. So that frames my trade here. So there was absolutely no confusion in this trade, right? There was absolutely no confusion. I was completely relaxed in this trade because I know what price is going to go and deliver to. Right? There's no if, buts, or maybes. I think it's going to go here. I'd like to see it reach that level. You know, everybody, you know, this crap, this absolute garbage that I see on Twitter and YouTube, where, you know, people going, oh, I think it's going to go here. It might go here. You know, I'd like to get in here. I'd like to get out there. Right? Very clear, very decisive. You get in here. You get out there. Right? Get in at the higher time frame PDRA when you're bearish after the Judas swing, and you target the nearest breaker. Right? Couldn't be any more clear. Then the next piece of price action we can break down. Let me just clear this. I don't need this anymore. Right? We had this session, this form, this range form just before the open. Okay? This range just before the open. Alright? And I was telling everybody inside Red Pill that this was the range that we were working with. Okay? And I was expecting price to purge each side. Okay? So we had liquidity sat here. And we had liquidity sat here. Okay? Now, when we have days when we're expected to see chop, and today we were expected to see chop because we had a huge range day yesterday and we have big news events tomorrow. You're expected to see this type of search and destroy type price action. Right? The search and destroy type price action. I'm just trying to sort my camera out. Absolutely. Alright, bear in mind a second, guys. Right, you're expected to see the search and destroy type price action. Okay, so I was mentioning to everybody that we're expecting price to come and purge these levels before running lower. Okay. And so at the open, in fact, it was actually this. It was actually this range. Take it back. It was this range. Okay. So I was expecting these two levels to get purged. Why? Why was I expecting those two levels? Well, firstly, we had this SIBI here, and this SIBI hadn't been rebalanced. There was no inefficient price delivery hadn't been painted on this displacement leg, right? We'd got to equilibrium before the open, but we hadn't reached up into a deeper premium, and this SIBI this sell side imbalance, buy side inefficiency was left open. Okay, so I was expecting price to run up into that. Also take into account that we're in this search and destroy, I'm expecting price to retrace off of that. Okay, and we had sell side sat below this low. So after this had been taken, price was likely to run down into this level. And we took this trade from here down to here. Okay, my camera is killing me. Absolutely murdering me. I'm just going to leave that off because it's just driving me nuts. So we're just going to have to do this a cappella, guys. Now, you're asking me, because everyone inside Red Pill knew that my level was 31.25 and I took an entry of 31.25, and you guys can go into my Twitter and check my levels, right? Why did I get 31.25? Now, I had 31.25 off this swing here, right? And I was looking for 1.5 standard deviations off that swing, right? That was my level to take my entry off. And that's where I took my long, off that level. Why did I take 1.5 standard deviations? Well, if we go and have a look at this swing, tell me how many standard deviations we went out the top. Right? If you can just drop a holy SH1T into the lobby, then that would be appreciated, right? No BS, I'm not giving you BS, I'm giving you PhD level ICT, right? So, this 1.5 standard deviations was a further confluence to why I went short up here on the Judas swing, tied in with the order block on the hourly. This 1.5 standard deviation out the back end was the exact same reason why I went long here. The exact same reason why I went long here. Alright? So we caught this entire range. So everybody I saw on Twitter was super confused about price action. It was as clear as mustard. But it was tradable, right? It was tradable, and the key to it was patience, right? So we had a number of trades. We had a short here, right? We had a short from here to here, down to this breaker, right? That was trade number one. That was the old breaker, right? Okay, this breaker. That was trade number one. It was about there, right? Didn't fulfill the 1.5 standard deviations. So inside Red Pill, I was always saying I was expecting price to come down and take it. It left it open, right? The second trade was to go short on this purge. As soon as this buy side was purged, consequential encroachment of this SIBI, right? Stop above the highs, down to 31.25. That was the second trade. Okay, the third trade was my 3 drives. So if we just clear this, clean up these charts a bit. So this was the entry that I got in, right? And you guys have seen my 3 drives, right? You know my 3 drives pattern, okay? Because I've posted it on YouTube 1,000 times. And if you guys are unfamiliar with what my 3 drives pattern is, then feel free to go and check it out on my YouTube, right? But it's absolutely slapped today, okay? So for those of you who do know my 3 drives pattern, then we have drive 1, drive 2, drive 3. Alright, let's just mark these up. Right? Who can tell me, let's just clear this. Right? Who can tell me why this was a valid 3 drives? First of all, who can tell me why that was a valid 3 drives? Okay, cool. So then, Joe Park, do yourself a huge favour, mate. Just do yourself a huge favour and just go and watch my free drives. Please just go and do that, right? Just do yourself a favour and go and watch it. The answer is correct, JD. They were reaching into a higher time frame PD array, right? And so you're looking for the third drive to run into a higher time frame PD array. Okay, this instance, it was that standard deviation that I'd mentioned before. Okay, and down into that level, which price respected. Okay, so now where are we looking to take our entry off? For those of you who have watched the video, where are we looking to take our entry? And guys, this I'm telling you how I took all my trades today. This is it. There was absolutely no ambiguity. There was no confusion whatsoever. Today's price action was crystal clear. So I'm telling you how I got there, right? This is no BS. So work with me here, right? Work with me, right? You know, I see a lot of there's confusion all over Twitter. There's confusion all everywhere. It's been absolutely crystal clear today. This is the reason why, okay? No BS. PhD level ICT, right? Right, exactly. Jeff and Nigel. Lowest down closed candle in the middle drive. Lowest down closed candle in the middle drive. Guys, I have spent months backtesting this. I did not have to release it to the world if I didn't want to. Please use it. The only reason why I do all of this is to help you guys, right? It's the only reason. I don't care about your subscriptions. I do not need your money. I'm doing it because I want to give back and help others and create a community of 150 millionaires, right? That is it. There's no other motive, right? If you think I'm full of shit, then just, leave. Okay, but there's many people out there who I know I'm not, right? And so this is your entry off the lowest down closed candle in the middle drive. Right? The lowest down closed candle in the middle drive is your hidden order block. It is a hidden order block. And what I talk about in the video is that you've got a couple of entries. This is one entry, and you can be really brave and go in here, right? You can even anticipate it forming and go in here, right? But if you don't want to do that, and if you're not sort of savvy with parlaying into positions, you can wait for price to expand out the back end. And what you're looking for are order blocks to form out of the housing order block. This is the housing order block. This lowest down closed candle, the red one, right? This is the housing order block. This is a secondary order block that forms inside of this. It's not a propulsion block, but this is an order block, okay? So you can take an entry off medium threshold of the order block out the back end, right? I'm not going to measure it out, I'll just eyeball it. But medium threshold of this order block, which forms out of this housing order block once the price displaces higher. That's your entry, right? That is your entry. You can see it hits it to a tick. That was my entry, right? Go onto my, if you don't believe I took the trade or you don't believe what I'm saying, go onto my Twitter and I took this trade, this exact damn trade, right? And I wrote it up to this midnight open price. Okay. Now, you could have shorted here and rode it back. So for those of you who have watched, didn't want to do that. So for those of you who have watched my video, what are we allowing price to do, and what actually happens more times than not? Who can answer that? Retest, exactly, right? This order block, we are searching for price to run up into to take a buy side, right? We are expecting price to come back to that order block. We expect it. Okay, we expect price to come back to this order block. You can absolutely cash in if you see this. I am telling you, nobody else is teaching this. Facts. Nobody else teaches this. Anywhere. Right? You can trust price to come back to this order block. Right? This lowest down close candle in this middle drive. That you don't even think. You just take the trade. You are taking the entry off of this propulsion block that's housed inside this order block that's housed inside this order block. That is your entry, and you target an expansion in price. So you then target an imbalance in a displacement leg, right? And you can see how price has aggressively moved away since returning to that order block. Okay, I took this trade and actually was targeting this this SIBI right here, right at the top below the swing low, right? That was the trade. All right. I'm not trading for the rest of the day. I don't care what price does. Right? I've taken my trades. All my trades were in the London and the AM session. I'm done for today. I'm up, an absolute bag. But the price action was incredibly clear. There was absolutely no confusion whatsoever in the price delivery today. None whatsoever. Crystal clear. Is there anything in that you guys are unsure of, or unfamiliar with, or do not understand? Yes, Nano, I do. Our ethos inside Red Pill is that we're not a bus ticket. So I will not ever tell you when to get in and out of a trade. That is for you. You need to build that discipline to be able to take a trade. It is absolutely no benefit to me. There's absolutely no benefit to you if I sit here and tell you what to do. Ask if you want, just ask anyone inside Red Pill who's inside this chat whether the way that we teach actually helps them improve as traders. I don't care if they tell me I'm terrible. Like I said, I don't care about your subscriptions. I couldn't care less. The vision of Red Pill is far greater than the little Discord. Like, that is not the vision of Red Pill. The vision of Red Pill is to work on a global stage. The idea is to, you guys won't know, but I have a real estate business and I sell into pension funds. The idea is that I'm looking to create a trading floor, and the traders inside Red Pill, and when there's and it's capped at 150, the community is capped at 150, and the idea is to get everyone to be a millionaire. And then my idea is that I set up a trading floor, right? But outside of that, we already have Red Pill Foundation, where we sponsor children across the globe, and we're already delivering on that. But I want to go across. I want to take Red Pill across the globe, and build schools, build hospitals, that sort of stuff. That's my why. I've already made my money in real estate, and I'm a successful trader. I don't need to be doing this. So if you think I'm doing this because I want your $50 subscription, you're balmy. But ultimately, the marketing, the admin, making sure everything ticks smoothly costs money, and so it needs to basically pay for itself. That's the only reason why there's a charge. And plus, I think that to have a little bit of hurt money is important to dial you in, and it separates the wheat from the chaff, right? And I don't want to do a free Discord where every Tom, Dick, and Harry comes in there and they just want to get a little bit of information, and they sort of want to be a trader but they're not sure. I know that if everyone's paying to be inside Red Pill, they are a committed MF, right? And that's what I want. And I want 150 committed MFs inside Red Pill, and that's what we're building. And you can ask anyone inside Red Pill what the community is like, but I think we've got an amazing community. It's absolutely incredible. I'm super proud of everyone who's in there, and the growth that I'm already witnessing is mind-blowing, to be fair. So, but yeah, to give you an idea, I already sort of mentioned how I handle it, but you can always see my charts. So I'm always screen sharing. You can always see my levels, and I'll always teach as we go, but I'm never going to say get in here, get out here. I'll tell you where I'm looking to get in, but it's up for you to pull the trigger. All right. Ivory. Ivory's always like slapping the arses, man. Like, this guy doesn't mess about. This guy does not mess about. All right. But to be fair to Ivory, he's doing an incredible job, right? He's always there. He's always turning up. He's always putting in the work, and so I know it's only a matter of time before he's locked in. So I have no interest for the rest of the day. Right? I have no real interest for the rest of the day. My actual thesis is that I'd half expect us to run down this breaker, but I wouldn't be interested in getting into that breaker until we get right down here, right? And whether we get down there again is up for debate. So where everything was crystal clear was in here, but my bias, for those of you who have known, has been I'm expecting price to respect this level up here, and for the market makers to put us inside equilibrium ahead of data, right? But there isn't enough confirmation for me up here to enable me to take a trade at this present time. So I need more information, right? Price has currently bounced off of my 3 drives pattern and is currently expanding higher, right? So at the moment, I have no interest in shorting, although I would, this is a potential level where you can go short, is run back into that order block and purge this buy side, right? So this is a potential level where you could go short. However, I have no interest in trading it, right? I have no interest in trading that. Let me have a look. This is a potential to go short. I'm not trading it, but this is a potential to go short. For those of you who I haven't actually really taught this much at the moment, but this is it's not technically a ICT concept, but it is a concept that I adopt using ICT. This is it's a broadening formation, right? And so price reject this level. And then you're looking for a level of BPR within inside of this that price would need to respect as a level, right? So we have BPR in this section here, right? So I'm actually anticipating price to come back to this level of BPR, and then I'd be wanting to see how price interacts off of that, right? So if price comes down and bounces off that, then fine. But if price comes down, crashes through that, and then not even that far, sorry, I take that back. If price comes down and breaks through it, then I'd be expecting price to head down, right? So for me at this present time, I'm sitting out, right? There's no trade for me where we are right now. I'm looking for price to get down into this level of BPR, and then decide whether to take a long off this or to go short. What I probably think is more realistic is if we get down to this level and we crack through it, I'll be looking to take a short, right? And I'll be looking to short it down. And my bias all day, if you've been in red side red pill, has been this breaker block, which is to put us inside a range ahead of data, okay? Inside a range ahead of data. So at the moment, they're painting to everyone that this is a cup and handle, right? So everyone who's retail, this is a cup and handle, yeah? You've got, sorry, I've got something in my eye. But you've got the high, and then it failed, and it's coming back up to retest it. This is painting a cup and handle to retail, right? But, for me as a professional trader, I'm looking at this as as very strong resistance, purely because I see this Tuesday as being a high, and we have large data coming out tomorrow. So why would they want to run price into a deeper premium ahead of data? They want to create max confusion ahead of the data release, right? And so if we're up here or we take these highs, it makes your decision making a lot easier in terms of where price is likely to head. So it's more likely that the market makers are going to drive us back into a range, right, ahead of data, and the data is tomorrow. So if price does continue to peg up, I will just move to the sidelines because it's going against my bias, okay? And I'm looking for more confirmation for me as to the direction in terms of where price wants to go, right? And for me, I would like to see price head in this direction to this BPR and then fail it, test it for a further continuation lower, right? That's what I'm looking at for the rest of the day. That doesn't necessarily mean that's right, but as I just mentioned, I'm waiting for further confirmation. Everything in the pre-market and this section was clear, right? Because we had very clearly defined levels of sell side and buy side liquidity inside of a range, and we had very clear standard deviations and price targets, right? Where we currently sit, it's not that, right? I mean, we could look at this this price leg and look at this as a standard deviation, and price hasn't quite hit one time standard deviation, so we could look at 4150, which would be pretty much slap on that whole site number, right? At institutional level, right? At institutional level, 4150. But for me, we're in the level where price is likely to run down, but I don't want to be trading this. I want to be trading when price gets down into this level, okay? For me, this is high risk up here because it could just peg up all day and then drop in the last hour, right? So I just want to stay out of this for now, right? Let me just see if we have any confluences with standard deviations. Yeah, I mean, we're in that level between 1.5 and 2 times standard deviation inside that order block in the hourly. As I said, this isn't an area to be taking a trade. I want to see more. Information. A fair value gap was time frame. Do you run off to copy down to execution chart? I'll try and answer your question. I think I understand what you're asking me, Jeff. But I'm assuming you're talking about this fair value gap here. So this BISI, right? This buy side and balance, sell side inefficiency, right? So obviously I have it on the hourly, but I don't. The way I have my charts is that I don't copy what I paste on one chart onto my other charts, right? So I'm just referencing this by eye. Okay, I don't need to have this slapped over this chart for me to be able to see what these levels are. Right, it's 31.35 and 41.35 and 41.31.50. Right, so I know this is the sort of level where, you know, I'm looking for price to respect, and then all I'm doing is I'm looking for you know, PD arrays or, you know, reasons why on this time frame that marry up to why price would break. And if you want the real answer, the real answer was actually going up a time frame. So if we go up onto the daily chart, we know that wicks are gaps, right? And so we can look at this wick on the daily. So this is yesterday's wick, okay? And we can take the high to low of that wick and what did price bounce off of, right? 25% of that wick, okay? So not only did we have 25% of the daily wick, we also had this fair value gap that I wanted to see respected. And then we also had the standard deviations off of this period of consolidation inside the London range, right? These are the reasons why I was looking to, apologies, they're the reasons why I was looking to go long or see that level respected, right? If price was going to break this level, this would then become, so at this stage it's an inverted fair value gap, right? So price has come up, gone through it, breaking off it. Once it breaks through, this now turns into resistance. Where it's support, it would then turn into resistance, and I'd expect it to run to this breaker block, all right? But it didn't. I was expecting price to be in search and destroy and run higher, which is why I was looking for longs of this entry. So now you can start piecing it together, right? You have the standard deviations out of that consolidation. You have 25% of this daily wick, which is a level. We know that they're not just thrown on these wicks for, you know, for no reason. And guys, if you're finding value in this, can you just smash a like on this stream, right? You just help out, you know, spread a little bit of love, right? There's 17 of you in here, I believe. So you know, there's only 7 likes, so 10 of you are being pretty cagey on your old mouse. So, you know, consider smashing the old like on the stream. But now you're piecing it all together, right? You have the standard deviation, 25% this daily wick, this fair value gap you want it to be respected. Then you have my 3 drives going on. And the 3 drives down into the daily 25%. Drives down into that daily 25%. And guys, I'm not telling you, I'm not giving you if, buts or maybes that you see all over fucking Twitter, right? If you want to cut out the noise and cut out the BS, right? Speak to anyone inside Red Pill, right? Tell me that is not to the tick 25% of that daily wick, right? And now you're piecing this all together, right? You're piecing this all together, and this is what's enabling me to be so confident in my trade setups. I'm not just going, oh, it looks like there's a fair value gap here. I'm going to take that fair value gap. Get the F out of here. Nano, I've been trading for 6 years, broski. So, yeah, I'm a bit like Rain Man. You know, it's all just logged up in the medulla oblongata, right? It's all inside the medulla oblongata, right? But yeah, there is. I do have a lot of playbooks, but the key is time, right? Time. You guys have just got to understand that you're not going to get this all in one day. And I know it sounds difficult coming from someone to hear that, but I prefer to be completely honest with you. I see too many people out there just wanting to watch the 2022 series of ICT, then expect to be able to, you know, slap a 20 handle trade. Guys, it doesn't work like that. It doesn't work like that, right? This is a marathon, not a sprint. And I've spent well over probably 6,000 hours in front of charts. So if you've only been trading 3 months and you've only been studying ICT for 3 months, then guys, give yourself a break. And I mentioned to this everyone inside Red Pill, like, your job is to get 1% better every day. That is it, all right? 1% better every day. And if you can get 1% better every day, by the simple rule of compounded interest, you will eventually get there. All right, but stop comparing yourself to me. All right, stop comparing yourself to me. Stop comparing yourself to anybody. Right, all you got to do is compare yourself against yourself and who you were yesterday. And if you can look at yourself in the mirror each evening when you brush your teeth and go, you know what, I got 1% better today, then that is all you can ask of yourself. Right? That is all you can ask of yourself. Because what you have to remember is I was you at some stage. Right? I was you at some stage. You know, I was in exactly your position. Trust me, I've blown accounts. You know, I'm fortunate that I have a real estate business which, when I transitioned to trading, enabled me to not have a worry of money. Okay, so I've already made wealth, right? And so I don't have a stress of trading. And I get it's difficult when you're trading and you have the stress of trying to meet bills and all that sort of stuff. But forget all of that for now. Just focus on getting better 1% every day. And over time, you will get there, all right? And you'll begin to start piecing this all together. And that's what Red Pill is all about. Building the intuition. Developing people into their own trader. Not a bus service, right? We are not a bus service. I have no interest in people coming into Red Pill going, calls or puts? Do I go long here? Do I go short here? I prefer you just to leave. If I'm honest, you know, I prefer you to leave. I don't want that type of trader, because they're never going to make it. They always want the shortcut, and there is no shortcut to trading. You either put in the hard work or you don't. Simple. If you've got the right work ethic, I'd love to welcome you inside Red Pill. But if you don't, stay on the outside and do yourself a favour. Go and join a bus service Discord. All right. So this level here, which is the 25% of the daily wick, was to a tick. But you also have my 3 drives. So now you're starting to piece it all together. This is what forms my confidence in trades. Okay, this is what forms, and there's absolutely no ambiguity. Absolutely no ambiguity whatsoever. Alright? So I hope that's a sort of long-winded answer, and I hope that answers your question, Jeff. Let me know if you want any further clarifications on anything. But in short, yes, I'm looking at a higher time frame fair value gap, if you want to talk about a fair value gap. And then look onto my execution chart, which is 15 down to 1, and I'm looking for confluences within inside that, and also on the daily chart. Yes, Peter B, there are still some left available at the moment, so you're more than welcome to join. We're closed at 150. 150 members, we close the doors. And then it's just 1 in, 1 out. So if people can't hack it, or they decide to quit trading, then a space will open up and someone can join. But once it gets to 150, it'll be a 1 in, 1 out. But the idea is that people just stay with us for life, right? And you know, we're building an absolute community, which is doing some amazing things already, just on the wider stage. You know, not just a simple. It's not just a simple trading Discord, right? It's more than that, way more than that. But you know, I get it. We're not for everybody. Is there any other questions? Anyone else have any specific questions they want to ask me? That's the link to Red Pill if anyone's interested in joining. Can you give us the top 3 concepts that we should get straight first? I don't want to do that, Jeff, if that's all right. It's not how I teach. It's not it doesn't work like that. You need to build a solid understanding of everything. It's not a case of what are the top 3 and then just wait for that. That's that, and it's not me being mean, Jeff, but that's the cheater's mindset. It's looking for the simple option. What can I do here that's going to make me money? It doesn't work like that. Because I could give you one strategy, but that strategy has 7 or 8 different variations to trade that strategy, right? If you want the very, very basic one, the very, very basic, just take the 2022 model. If you want the most basic, I'm not going to tell on YouTube all of my secrets, right? I keep that for Red Pill members and what we do inside Red Pill, right? But you want the very, very basic, focus on the 2022 model. And I'm assuming you know what there is no priority, Jeff. I can make as much money off of 3 drives as I can off a 2020 model or a Asian London session Judas swing, right? There is no best. It's whatever the markets provide. I trade. For me, that I think the real question that you're asking, Jeff, would be is what is the fundamentals that I'm looking at to take a trade. That's the real question. It's not what is the setup to take. It's the fundamentals that you're looking at to base a trade off of. And for me, it's making sure that you're either in a premium or a discount and a premium. And you understand where the liquidity pools are, and you understand where the inefficiencies in price are. And if you know where the inefficiencies and imbalances are in price, and whether we're in a discount or a premium, and where the liquidity pools sit, then you can start applying strategy and you can start applying techniques. But until you understand the fundamentals of market structure and institutional order flow and where price is moving to and from, then all of the rest is not going to help you, and you're trying to do 10 steps before you know steps 1 to 2, right? It's not necessarily go low to go high. It's being able to analyze price on a higher time frame and assess where price is drawing to and from. Okay, so if you want like the top down analysis on where I start, so I always start on the monthly and then I look to see where price is drawing to, right? For me, this is this is where time and understanding of how price works. So I could go on, and this is where it's complicated. It's not something you can just talk about in one YouTube session. But for me, there's a macro picture that falls behind where you believe price is likely to draw to. So for me, I understand seasonal tendencies, right? And seasonal tendencies usually start in May, where we start to get distribution lower. However, I do believe that we have the potential for the market to run lower earlier, because I can see this year being the start of a recession, all right? So I'm just going to turn this camera off because it doesn't want to work. So for me, there's a potential for me that, and I've been saying this for ages, that Tuesday is the high of the year. Okay, I don't want to go into too much detail, but basically, if the data is bad this week, for example, if unemployment data is high again, yet the market moves negatively to that news, that is your first indication that the market makers have shifted their bias and they are now looking to distribute money down, right? So looking to accumulate to run the market south. For the last 2 months, every time there's been negative news, i.e. there's been unemployment data, there's been whatever it is, FOMC data that's come out, the market is rallied, okay? As soon as we get a chink in the armor where that no longer happens, that is the market makers shifting their position, all right? And they no longer believe the Fed can manage inflation. And so we're likely to fall into a recession where price is going to head lower. And now we're looking at where we currently sit in the calendar. So we're on the 11th of April. Distribution usually takes place in May. This is a huge week for me, okay? An absolute huge week in terms of where price is going to be drawing to over the coming months, all right? And so when I'm looking at this monthly, I can see, and this is it's an argument that price, there's a lot of liquidity set up here. So you could argue that price is driving up into take this liquidity that we have up here. However, for me, I'm not so sure. I think that ship may have already sailed. And so if you look at the weekly, the same thing applies. We have this buy side that's set up here. So you have a lot of traders who are believing that price is going to run up to sweep this buy side, potentially up to this volume balance on the daily at 4225 before moving south. The longer we've gone into April and this has not been achieved, the less likely I believe it is we're going to get up there. And so for this week, that's why I believe this week is so key, right? To see whether we get up there or not. And then that sort of plays into my daily. So for this week, until this news release, and the first news release is on Wednesday, I have been macro bearish because I'm waiting for data to punch us through these dealing ranges, right? To decide whether it wants to come and run these levels up here, right? Which would be on this buy side on the weekly chart, right? And it's going to take data to do that. Data is what drives price above and below dealing ranges, okay? When we don't have data, you're likely to stay inside a dealing range, all right? So then that's forming my bias on the weekly, okay? And you can see that, if we just go to the daily, we have this order block, okay? So this is an order block now on the daily. And we're at 75% of this order block. So this would be a level now where I'm expecting price to drop from, okay, if my macro is bearish and I believe that they're going to hold us in a range for data. So you can see how I'm starting to do top-down analysis, right? And I'm starting to pick levels. And this forms my bias for today. So now I'm on the, obviously we've moved forward on the day, we're not there anymore, but if we go to sort of today's price action, this is now framing my bias for today, right? Everything I've just explained is how I'm getting to why I'm confident in taking my setups. And so, okay, I'm looking at the PD matrix. What has price got to get through before it takes that old high? Well, it's got to go through an order block and a rejection block and the old high. Well, we don't have a rejection block, but we have an order block. So for me, this was the line in the sand. And so it was a high probability, low risk entry for me to go short here. Right, so this is now higher time frame directional bias using the daily, weekly, monthly and hourly chart. Now I'm looking at my execution chart, 15 down to 1, for what the market is going to present me. What is the market presenting to me for me to be able to trade? It's not, Jeff, we're looking for a 2022 model when price gets to X. Fuck no. Like if you're trading like that, like you're deluded. And apologies if I go on a rant, but I have a certain way of teaching, and I apologise if it comes across abrasive, but it's just my style, right? I'm actually a nice guy. I want you to do well, but I have to get the point across, okay? This is the reason why I'm looking to go short, and this is then for looking for reasons on my execution chart. What is the price printing that is enabling me to take that short? And we had the Asian session high. We had the Asian session range, the high and the low of the Asian session range. And I'm macro bearish, right? I'm macro bearish, so I'm looking for trade setups that are going to offer me an opportunity to go short. This is my London session, or it's the ICT to be fair, London session, Judas swing out of the Asian session range. Up into the order block on the hourly. There's no confusion, guys. Absolutely no confusion whatsoever. No BS, no if, buts, or maybe. Price is maybe going to get here. I think price is going to draw here. No. None of that. Right? To a tick. To a tick. You want further confluence? We can add this. We can add as many layers as you want to this. All right? If you want to do this, we can get really, really creative. Okay? What did we have here? Another further confluence. On what time frame is this on? This is on the 1 minute. Right, so you've got the hourly. Now you've got my Asian session Judas swing up into the higher time frame order block, which is the PD matrix, which is the line in the sand, because there is no rejection block, and it's not going to take the high because we're going to wait for data in order to do that. Right? Now we've got on the 1 minute chart, we've got an extension of this swing higher to a tick. Right? What are we searching for when we get up here? We're searching for the nearest breaker. Where was our nearest breaker? Our breaker was down here. Okay? That was our target. Right? The high, the low, the high, the low on the hourly. Right? This is it on the 1 minute. That's where you drove price down to. No if, buts or maybes. That's your trade. Then, in the New York session, we have the range created between here and here. Okay? We had this form. This high, this low. That was your range going into a choppy morning because we had such huge range yesterday and we have data coming this week. This is how you start piecing stuff together, right? It's not just a case of where's the nearest fair value gap, I'm going to enter it. That's novice, guys. It's novice shit. Right? Stop thinking you're going to get this in a day. It takes time. It takes time in front of charts. It's not something you can get going down a rabbit hole on Twitter with some Tom, Dick or Harry telling you about weekly chart templates. Guys, come on. Right, so then we're looking at this range, and we know that we're anticipating chop in the morning because we had a lot of range the previous day and we've got news on Wednesday. So we're anticipating chop in the AM session. If we're going to get that, we're looking for search and destroy setups. We had this range formed before 9:30, the most relevant high and the most relevant low before the 9:30 open price. And what did we have? This was all called out in Discord inside Red Pill, right? For price to come and purge this and then come and purge this low, right? What did price do? It purged this high, ran into this SIBI, sell side imbalance, buy side efficiency in this displacement leg. You want to measure this out? It runs into an OT of this displacement leg. Guys, no if, buts or maybes, no BS, it's to a tick, right? Then what you're looking for price to do is to run down to take this sell side. What was the sell side? You're now looking at this range and you're looking at 1.5, the exact same standard deviation as what was out on the top, right? Which is 1.5 standard deviation, right? 1.5 standard deviation. That's your entry. That was your entry to go long, right? And then you're looking at other things. This is now your 3 drives. Drive 1, drive 2, drive 1, drive 2, drive 3 into 25% of the daily wick. Expecting price to move higher, right, inside of the fair value gap that we had marked previously. Taking out this breaker block, running into 25% of this daily, running some stops out, right? Then we had the 3 drives, the order block form, that was your entry. Absolutely none of this has been if, buts or maybes. We've known exactly where price is going, right? Exactly where price is going. Right? You missed the first entry, you wait for price to come back to that same order block. There's your second opportunity to get in. Drive price higher. What would you have been targeting? This SIBI. Why that SIBI? Okay, because you can extend this higher and you can look at this range. And you're looking at SIBIs or BISIs below swing highs or swing lows. Right? And price is extended higher. Okay, this is why I didn't want to get in because you're likely to get this pegging price action, right? Did that make sense? Does everyone get that? and I like to go long off down close. So use that as you will, but
Order submitted.
it really depends where they place us today, Jeff. So where they decide to place us for the remainder of the day. So for me, my macro is bearish, and I have the potential to see this as the high of the year. Okay, this Tuesday, the high of the year. Now, my bias could be wrong, and so what I'll do is wait to see how the data prints this week to see where the price wants to run this high. Okay. So as I mentioned previously, I'm waiting for a news print to happen where the reaction is negative to that news, and as soon I'm waiting for that. So I don't have I'm not going to sit here and guess what the market makers are likely to do on that news. I'll wait to see what they actually do to that news, and then I'll trade accordingly. But if price holds above here and wants to take this high, then I'll anticipate price to want to come and run and take this buy side up here. Right, take these relative equal highs and run into this volume imbalance on the daily. Okay, so if we just extend the daily, we have a volume imbalance up here on the daily, and I've actually been looking at this volume imbalance for months. But the only thing which is making me more cautious is the fact how long it is taking for the Fed to get inflation under control, because they're talking about a soft landing, but in reality inflation is still going up, and the data is not falling suit. Right, it's not falling into suit. So if price gets above this interim term high here, then I'd expect it to come and run this buy side. And then I'm looking for it to draw up into this volume imbalance. However, if data prints and price fails to get in above this level, then obviously this remains my position that price is bearish, and I'll be looking for levels to go short off of that. Okay, but it all depends where they place this today. If they keep pegging this up higher and higher and higher and want to come and take this high, then I'd anticipate the data to come and sweep that before potentially dumping. Whereas if they run us back down here today and in the Asian session and tomorrow's pre-market, so if they run us back down into here, which is what I'm anticipating to put us back into range ahead of data, which is generally what the market makers want to do. They want to cause mass confusion, so you don't know which direction price is heading, right? So I'm half anticipating them to put us back into this range, and then I'll be looking at potential levels for price to reject. Okay, so if price does move higher and come down here today, then the lowest down close candle, this would then form a breaker block. Right, so I'll be looking for that level to be respected for price to run lower and come and take this sell side and run down into a discount of this range. Okay, so none of this at any point has been rebalanced yet. None of this has been rebalanced yet. So we have a mitigation block down here on the hourly, and as we know, the mitigation block is the line in the sand. So I'm expecting at some point this week for price to get down here. Whether they take this high is a question which the jury's still out on. For me personally, I'm not sure it will, but I'll wait to see what price does and delivers. But I'm anticipating price to draw us down into a discount. Can you forecast price expansion off the new tomorrow? Like I just said. I'm not gonna guess the news, but you could take this high to low, and you could use a standard deviation on this, right? And I'm looking for anywhere between 2 and 3 standard deviations is a long-term target, right? So we've got 1, 2 times standard deviation. Where does 2 times standard deviation place us? 2 times standard deviation places us into this mitigation block, right? Which in the PD matrix is a line in the sand, right? So we have, what is going on here? Why have I got so many lines? Get off my chart. Alright, so we have a 2 times standard deviation off that swing high taking us down into this mitigation block, right? Well, I'd also look at 1 times standard deviation for a period of consolidation. And then we also have 1.5 standard deviation inside this old fair value gap. So this, if price reaches to this, would turn into an inverted fair value gap, right? So price is traded through it, and you would expect price to come and respect it. So these would be my 3 levels for price to run into during day for this week. So if you're asking me to forecast price, this is where I'll be forecasting price. Does that answer your question, Jeff? Yeah, there is a lot of liquidity up here. There definitely is a lot of liquidity up here. But you've got to play into mind the macro in terms of where we are globally in terms of the global market, right? The global market where we currently stand, and it ain't pretty, right? It's not pretty what's going on out there, and the Fed is unable at the moment to get inflation under control. So the data this week is huge. And I'm waiting to see if a print comes out and the reaction to it is negative. So if we have high unemployment and the market drops, that's your first indication that the market makers, the institutional funds, have changed their position. They are no longer believing in a soft landing, okay? And so I'll be anticipating price to run much lower levels. So take out this liquidity and potentially run the December low, right? And take us down into this breaker down here, right? That's what I'll be anticipating. There's a niggling part in the back of my mind where I'm anticipating price not to reach this, I feel like that I feel like that may have already left the nest, But I'll wait to see what price delivers, and if obviously it holds above there and it wants to keep pushing, then obviously I'll move to the sidelines, wait for price to deliver, and then I'll look for signs of reversal up here. But my macro is bearish. Yeah, I'm not going to talk about standard deviations today, real. I gave you my levels. Indeed, 10 minutes for power hour, 3 o'clock coming up. So this midnight open price, I'm looking at 42.50 as an area to go short if price gets up there. Really tight stop.
Order submitted.
So 41.37 would be an area where I'd be looking for price to fall back into. Back into this BPR, right? So this balanced price range. Yeah, I mean, don't get confused, Jeff. I'm an ICT trader, right? So I use, I use ICT macros. I trade to those macros. About 88%, something like that when I last checked real. So whether we get into sort of that level and then drop. I take about 4 trades a day, 4 or 5 trades a day. So I'm a range trader. I'd say my usual is about 10 to 15 handles is my bread and butter. You can wait for break of structure if you want. Yes, I'm funded. Right, guys, I'm going to probably leave it. I'm going to leave it here because I'm going to drop back into Red Pill now. So I hope you found that useful. I hope you took something out of that, and that cleared up today's price action and the session today. It was very, very clear in terms of what was being painted. You know where I'm targeting. You know what I'm looking for. I'm looking for price to run down to this BPR. All right. So I'll leave it there, guys. If you are trading, trade safe, trade smart. If you do decide to drop into, Red Pill, I look forward to welcoming you on the other side. But until then, guys, trade safe, trade smart, and I'll see you soon. Take care. Bye. Is Red Pill Vice or only text? No, I stream live on inside Red Pill, so basically this, but it's direct, right? There's no lag or latency. And we also have we also do live Q&A sessions. We have leaderboards. We have Red Pill Foundation. We have all sorts in there. So it's a one-stop shop for everything ICT. But I'll leave it there, guys. If you decide to join, it's entirely up to you. I'm not here to pressure sell you, so it's entirely up to you. All right, but if you do decide to join, I'll welcome you on the other side. But take care, guys. Peace.